Hi everyone, welcome to the Decent Trader Sessions. Philip Swift here, hope you're doing well. Thanks for joining. Each week I share an on-chain or market cycle indicator for Bitcoin and show you how it's really useful for analysis. Also on this channel we do analysis from Phil B, and sometimes share live streams from the Decent Trader Discord, so make sure to check those out too. If it's the first time here on the channel, make sure you hit the subscribe button, turn on the notifications so you don't miss any of these videos, and also please hit the like button because it really helps us as we try and grow this channel, so we do appreciate that. I have to say that none of this is financial advice. I'm not a financial advisor. I'm just sharing all this stuff for educational purposes. Hopefully you find it interesting. Okay, so this week we're going to be looking at the Pi Cycle Top indicator, which is an indicator I built about a year and a half ago, I think around the same time as the golden ratio multiplier. And they're quite similar in a way, and I'll show you why in a moment. This is probably one of the most accurate indicators I've come across and found for Bitcoin in terms of being able to pick out the market cycle tops, the very tops of Bitcoin's price cycles at the top of each bull market. So hopefully you'll find it interesting. I think it's super interesting how it works, and obviously we'll have to see how well it plays out this cycle. Right, so this one is extremely simple, and I'm kind of amazed by its simplicity really. If you've seen previous videos, you'll have seen me talk about how Bitcoin goes through this broad adoption process arc, so this clear arc shape you can see going across the chart when we have it on a log scale. So that is in price terms showing Bitcoin getting adopted by more people over time. Okay, so and then within that we have these market cycles where you have the tops of the markets where everyone's super bullish, and then the market tend to crash, cool off, and we have the bear market down here. And you can see we've gone through 3 or 4 of those throughout Bitcoin's history. And right now it looks like we are tracking up nicely into a new bull market cycle. And certainly we've seen some really positive price action the past week or two, which is great. Right, so how does this indicator help us? Well, it uses 2 simple moving averages. The first of which is the 111-day moving average, which is one that I like to use particularly in bull markets because it tends to offer a pretty good buy the dip opportunity at times. You can see last cycle here, price would come back to this moving average and it gets hit quite often. You can see here it didn't close on the moving average here, but it did wick down to it intraday in September 2017, so it gives you quite a good number of buy the dip opportunities in a bull market. So I personally like to use that moving average, and that's why I was playing around with it when I was trying to come up with new indicators. And we also use the 350-day moving average times 2 multiples. So if you'd have seen last week's video on the golden ratio multiplier, you'd have seen me talk about this 350-day moving average, which is pretty much the 1-year moving average for Bitcoin, and why it's very important in Bitcoin's market cycles. When price breaks above the 350-day moving average, that tends to kick off a new bull market cycle. And what we use here is a times 2 multiple of that 350-day moving average. So what we're doing is we're taking the values of the 350-day moving average and multiplying those by 2. Okay, and if you want to know a bit more about that, I do recommend checking out last week's video on the golden ratio multiplier, where we explain that in a bit more detail. Anyway, what we're looking at here is when the 111-day moving average, so the orange line, crosses with the 350-day moving average times 2 multiple. Okay, and when it does, you can see here, if we look at the last market cycle, I'm just going to zoom in here, you can see that when these 2 lines cross, so the 111-day moving average, when that catches up finally with the ×2 multiple of the 350-day moving average, that tends to tell us that the market is so overheated it is about to top out. And in fact, if I zoom right in, what you'll see is that last cycle when these two crossed, and zoom in even more, when these two cross, actually last cycle it picked it out to the day. So it actually, these two lines crossed on 16th of December 2017. And I do have TradingView script available for Look Into Bitcoin subscribers and also for certain Decent Trader subscribers. And you can see there that I'm not just fudging it here on this Plotly chart. It does actually cross. You can zoom in more on TradingView. It did cross on the day last cycle. So that's all well and good, but that's obviously one data point. If we go back to the previous market cycle, and where we topped out in late 2013, you can see here that they crossed just a couple of days. I think it was, I'm not sure which of these was the actual high, the 29th of November or the 4th of December, but they crossed on the 5th of December, which is still pretty close. So from memory, it was the 4th of December that we actually topped out. I think intraday it was a higher wick, yeah, and actually on a daily close it was higher. And so yeah, that was the next day these two lines actually crossed. Well, the 111-day moving average crossed up into the 350-day moving average ×2. And then if we look at the earlier high in 2013, so it was spring 2013, wasn't it? You can see here they crossed the 111-day moving average, crossed up into the ×2 multiple of the 350 on the 5th of April, and then we had this sort of parabolic run up. Literally like three days later we topped out. So it was the 6th, sorry, we crossed, and then we topped on the 9th, so 3 days later. Okay, so really interesting tool here in terms of how it seems to pick out these market cycle tops. Now, if we go right back, all the way back to 2011, you can see it got close, but it actually wasn't as accurate. But I mean, back in these days, the volatility was so high, and you can see price was racing between like $1 and $15 or $30. So didn't quite catch it here. It clearly got us sort of within a week or so, I think, is that a couple of weeks of the top. But that was the very early days, and you'll see a lot of indicators struggle to do well in those very early days where volatility was high and there were very few people playing the game for Bitcoin in terms of speculation. So why does this indicator work? Because it's quite bizarre how it does seem to work so well in the previous 3 cycles. Well, what it's doing is it's showing us when the market is overheated. In fact, so overheated that the 111-day moving average catches up with a ×2 multiple of the 350-day moving average. Yes, we have this slower moving average but at a higher level, and this shorter term moving average, the 111-day moving average, catches up with it, right? And what that is telling us is that in the short term, price is racing up, and that's what we see in these parabolic runs up as Bitcoin gets adopted and goes through these extreme market cycles. It catches the extremities, the final stages, when price is racing up so much that this shorter term moving average is catching up with a ×2 multiple of a slower moving average. Yeah, so that's why we're seeing it. And also it's really demonstrating this cyclical nature of Bitcoin on long-term time frames. So I think it's really interesting, and when I noticed this, the thing that really blew my mind and a couple of other people's minds when I shared it with them in the space was that so this indicator picks out the tops to within 3 days of the past 3 cycles, And it's clear there's clearly something cyclical to it. But it's interesting that if you divide 350 by 111, what you get is 3.153, which, as you probably can guess, is very close to pi, which is 3.142. So extremely close. It's like 0.01 difference. And in fact, it's the closest to pi you can get when dividing 350 by another whole number. So clearly there's something going on here in terms of the cyclical nature of Bitcoin as it goes through its adoption process, and that's why I called it the pi cycle top indicator. So I think it's really interesting on a couple of different levels, and clearly very useful for picking out market cycle tops. We'll have to see if it works this cycle, guys. Maybe it won't, but certainly I'll be paying attention to it along with a bunch of other indicators that I'll show you in future videos. So that's it for today. Hopefully you found that interesting. If you do, please just hit the like button because it really helps, and subscribe if you want to subscribe to the channel. And if you want to just see more analysis from me or from Phil B for LB, check out decenttrader.com because we do loads more stuff there in terms of trading as well as longer term stuff. All right, guys, that's it for me this week. I will catch you next time. Cheers.